G'day, welcome to Lunch Money, where workout, special situations and commercial finance specialists give us their weekly take on the news headlines. My name's Nick Samios. I'm the Director and Fund Manager here at Hermes Capital, and I'm your host. So once again, welcome. Just a reminder to like, share and subscribe to Lunch Money on YouTube or to whatever podcast platform you're listening to. I'd like to get underway by introducing the first member of our panel, who is Travis Dix. How are you going, Travis?
Excellent for Friday.
Fantastic. Travis is the Queensland manager at National Credit Insurance Brokers. Travis was actually the very first guest on Lunch Money, and he's making a reappearance here for us, and we're very grateful to him. His first appearance was very popular because of the wonderful insights that he brings. It was a different time back then, Travis. It was early in the COVID days, and we weren't quite sure what was ahead of us. There was, cover being cancelled, and then it was uncancelled. What's been happening, and what's really keeping you busy lately?
Yeah, no, certainly there's a number of different industries. The insurers are certainly looking at the new business, but they're being quite wary about what's happening. I mean, some of the insurers are probably a little bit more cautious when taking on new policies at the moment. There's probably two or three which are basically saying, hey, let's just wait until about September, October before they'll start quoting on brand new business. Whereas there's a couple of the insurers like QBE, for instance, they're still open for business, but they are being a little bit more picky on the type of businesses. So probably more food exports are okay, grain, but certainly building construction still second-tier builders becoming a little bit tougher to get cover on. And also they're looking at people's age receivables a lot more closely, as well as you can appreciate. So if clients are got 20 or 30% outside of 120 days or 90 days, it's a little bit tougher to get a quote, that's for sure.
Is that right? So they're very much focusing on credit management within the businesses that they're looking to provide cover to.
Yeah, no, absolutely. I mean, a number of our underwriters, one of our largest underwriters in the market, CoFast, just put out a national statement yesterday. They are expecting in the APEC countries a 33% increase in administrations over the next 12 months from June onwards. So a lot of the insurers are a little bit nervous, and you can probably understand they're as much as they want to write a lot more new business and cover clients' trade receivables. They just want to look at each particular case a little bit more focused to make sure that how things are being affected. But we are seeing a lot of businesses at the moment who are, like you mentioned earlier, are travelling quite well, which is quite reassuring. And I'm certainly taking the more positive view that there can be a quick recovery.
I mean, I guess that things didn't get as bad as everybody expected they were going to get, did they? So I guess, you're probably expecting to see an avalanche of claims, but it hasn't happened just yet.
No, it hasn't yet, which is good. And certainly, as you're aware, a lot of those changes have a lot of clients have had that relaxation period up until September, October. So the insurers are certainly preparing for a little bit of, I wouldn't say Armageddon, but they are quite nervous to see after those next 6 months of what's going to happen in terms of, have people been have they done the right thing with JobKeeper? Has the money been put to good use? A number of those factors are coming into play.
I guess it's interesting that you talk about the management of the ledger. I mean, whenever we're looking at where there's a credit insurance policy in place, we're very cautious to make sure that all of the normal conditions are being met. 90-day accounts, for example, are being reported. Limits, people are sticking to limits, and because I'm aware, obviously, that you have to play by a certain set of rules. But people can still get cover though, and new policies are happening. But do you give advice? So you're able to advise customers or new clients on how to make sure that their ledgers are being tightly managed?
Yeah, absolutely. I mean, we offer, obviously, trade credit insurance is one of the major tools that we provide. But certainly, in the case where some clients have had perhaps a really large amount of bad debts in the last 12 months, we have had a couple of really large companies go into administration even in the last couple of weeks. So we've had quite a few inquiries from those customers. And unfortunately, once you've had a really large bad debt, it is right now very tough to place that business. So we're
Yeah.
able to monitor their customers and give them access to our database, which has about 1.2 million live debtors. So, and we receive that 90-day information very, very quickly once a month. So everyone who has a trade credit insurance policy has to just advise us of any accounts that are problem accounts or go into payment plan, and then we send debtor alerts to our clients. So that's become probably more and more, as well as our collection divisions have probably gone really skyrocketed at the moment because everyone's debtor days have certainly been increased.
Look, I think that the debtor alert, I know that we've discussed this before, but it's a wonderful collection tool, because if you say to someone, look, if you're going to fall, I know I've done it myself, you're going to fall into 90 days. I've done this on behalf of my clients. You're going to fall into 90 days. We're going to have to report you to Travis, and he's going to let everybody else know. So we don't want that to happen, obviously, and it can be remarkably effective sometimes. So look, we'll just pop you on hold there, and we'll introduce our next guest, Sharon Taylor. Travis was coming in from Brisbane, and Sharon Taylor is coming to us from Melbourne. Good afternoon, Sharon. How are you going?
Hi, Nick. I'm well, thank you.
Fantastic. Now, Sharon runs the analysis and research area at Performance Property. So she's a property market research and an analyst, advising people on property investments and portfolios around Australia. What's keeping you busy? I guess we haven't spoken to you on Lunch Money before. So what's keeping you busy lately, and what's sort of changed in your world in the last, since all this COVID stuff started happening?
Yeah, well, I suppose personally, as you said, head up the research team. So at the beginning and ongoing, we're looking at, we're data focused, and our advice comes from the data. So really going back in history and understanding, through past crises or recessions or depressions, what happened to, unemployment peaks, where did price house movement go on a national level, and then breaking it down into a capital city level as well. And and comparing that to obviously what happened with the share market at the same time. So just understanding what happened to house prices through those eras, and obviously we don't forecast, or we can't forecast exactly what is going to happen. No one can,
Sure.
But we can use that data as a base to know what happened. And I mean, what we discovered is that the national house price very rarely fell when the stock market fell, and unemployment got to peaks of 12% in the 90s, 93. Where house prices still rose on a national level. So, we believe that there'll be different markets that move at different paces, and a lot of that will come back to the fundamentals that existed in those markets prior to COVID. There'll be strong markets, and there'll be not so strong markets, and asset classes within those markets as well, which will perform better.
Right. Okay. So you're providing you're undertaking the same level of, I guess, econometrics and all that sort of fancy stuff that happens with share analysis and what have you, by the sounds of things.
Well, I don't know if it's that fancy or not, but we use the raw data that's available to us. We're not, I suppose, just taking on other people's opinions as our own. No. We're analysing the data that can be, and I suppose the challenge at the moment is that the data there's a lag in data. So we're taking on board what we're seeing on the ground in the markets that we're active in, because at the moment, apart from some statistics like unemployment rate, for example, is a monthly stat, or vacancy rates are a monthly stat, it's very hard to see that data come through yet to know exactly how it's going to affect and how it's affecting at the moment. Yeah.
And just before we go to our next guest, who are you mainly working for? What sort of client groups are seeking your services?
Look, our core client are sort of high income earners to 250K plus household income that are looking to either use property as an investment strategy to pay off their PPLR debt as fast as possible, and looking to build sort of $5 to $10 million properties portfolios. And I only deal in the residential side of it, but we offer the commercial advisory side of it as well for clients who are needing to diversify out of just residential as well.
And you're also doing a little bit of work for accountants and solicitors and that sort of thing?
Look, I suppose we try and create strong referral relationships with those type of I suppose expertise as well. And always happy to help clients wherever they come from, I suppose. Yeah.
Okay. All right. Fantastic. Okay. Well, look, we will just put you on hold there, and we'll just introduce our next guest, Nick Martin, also from Melbourne, from BDO. G'day, Nick. How you going?
Well indeed, Nick. How are you?
Fantastic. Now, Nick, I have to say it is just as well that I know you really well, because you're not really a LinkedIn guy, are you? I'm looking at your LinkedIn profile here, and it's just a blank page. But I guess it's a little bit like, if you need to ask, then your reputation speaks for itself. Nick, and you're a restructuring partner there at BDO, which is obviously a national firm. What's been keeping you busy of late?
I've got a really interesting matter at the moment, Nick. I've got a client that I'm working with who really is in the middle of a perfect storm. He's in an industry that his business has been decimated, and at December he was on track for a $6 million profit, and yet his business has literally evaporated. But there's a very good underlying business, but he is exposed to landlords, so he's got a 3-month holiday until the end of September. He's got his files being transitioned to the impaired asset area of his bank. He's got concessions until the end of September. He's got JobKeeper, which is sustaining his workforce until the end of September. All of his suppliers are sitting back and waiting because they can't take action until the end of September. And so he's really looking at how does he pivot his business and reconstitute it. And he's got support from one of the state government industry funds, which is very good. So he'll deal with all of his creditors, but his challenge then is going to be, how does he fund the restart of his business? So he's going to use up all his petrol getting to that point. And so his gaping hole now is, I'm going to need equity to fund the restart. That's his great challenge now. Okay, and it's pretty typical of a lot of businesses.
And is that a small business, a middle market? What sort of size?
Oh, it's a $5 or $6 million profit business, which employs about 50 people. So it's a good family-owned business that until December was going beautifully.
I guess one of the issues in a business like that is that they're eating away at the family wealth, aren't they? Just to keep the doors open, as much support as they might be getting.
Well, it's interesting. The impaired asset area of the bank has said, we need you to consider contributing your home to our security. And so that makes for a difficult conversation with his wife at night time.
Yeah.
Because it's got to be a joint. He doesn't own the house, she does. What's more important, saving the family home and the marriage, or the business?
Yeah. And is it this kind of advisory work that you're seeing mainly? Because it sounds like it's an advisory kind of role, as opposed to, say, a formal restructuring type of role. So it's mainly advisory work you're seeing at the moment?
That's the case, but I think there'll be an inevitability with this particular matter that there will need to be some form of formal restructure to ensure that we get to the other side and are able to restart the business in a meaningful way. Yep.
And obviously you're with it's a large national firm, BDO, and I know that there's you've got capital raising and M&A people and all that sort of stuff. Is there a cross pollination on those sorts of deals or files, I should say?
Well, there is, but I think it's fair to say that if you valued the business, it wouldn't have much back, and you want to project forward. That's where the valuation complexities come into play.
Right. Yeah, well, that's interesting. I mean, I'm looking at a matter at the moment, and we take an asset. We're looking at the assets, but I'm told that I'm competing with other bankers who are taking an enterprise value view of the business, and I'm just not sure how that works in the current marketplace that we're in. I know in your world, enterprise value is not necessarily looked upon so favourably.
Well, I know that in this case, the impaired asset area of the bank will ascribe zero value to the security. In fact, they're probably underwater. So the threshold question is, what does this business look like? What can it look like in 6 months, 12 months, 2 years? Because that's the chance to recreate substantial value.
And so I guess in that scenario, the bank really has to play along, don't they? Because I guess it's a very delicate path that the bank walks down. If you're saying that they're ascribing zero value at the moment, obviously, and if they're taking a view that in 6 months' time the business will be worth something, I guess they have to tread gingerly.
There's that, and there's also the mix of how do we find equity to help fund the start of this business. I mean, debt's a part of it, but to what extent will the bank support it? And to what extent can we source some equity to help with that restart?
Okay, all right. Well, look, thanks, Nick. What we'll do now that we've introduced everybody, we'll bring everybody together, and we'll move to our headlines. We're starting off with a look at the property market. We've got a couple of headlines there. Sydney, Melbourne auction clearances surge. I know that we have a lot of friends over on the West Coast. I noticed that WA or Perth doesn't seem to be mentioned in that headline. And we've also got this interesting one that caught my eye about US private equity launching a $1 billion fund for industrial property. So I wonder, in your area there, Sharon, what are you reading into these auction clearances? I noticed that in that article it talks about there's a lot of bargain hunters out in force is one of the headlines. What are you seeing in your analysis?
Yeah, I think buyers are looking for a bargain, that's for sure, but they're not necessarily getting it at the moment. I mean, those auction clearance rates, it's definitely a positive sign, but I think you're looking at very low levels. And if you go back to just February this year in Melbourne, for example, the number going into auction was about 1,200 as opposed to 400.
Right.
So I don't know if there's much we can read into it at this stage.
Right.
I know on the ground in certain pockets, I've had reports that there's multiple registered bidders, 10 plus in some instances for those good quality houses. So there seems to be some pent-up demand. And we look back at two of Melbourne's affordability, it's at lows as seen like back in 2009 at the moment as a result of those latest interest rate cuts. So if people are secure in their jobs and can get the finance, there's some really it's really good buying at the moment. We're seeing really low levels of good quality stock, which is also, having demand pent up as well. Brisbane's a good example of, multiple 10 plus groups through opens. We're starting to see a good mix of off-market opportunities and auctions as well. More good quality stock coming onto the market in recent weeks as well. And once again,
so that's interesting. So when you're doing your analysis, you just mentioned that you're getting groups of 10 plus to opens. So you're going to that level of detail when you're looking at what's going on.
Well, that's our observation of our experts on the ground in certain markets. So if we think about Brisbane, we're in the inner city blue chip gentrifying areas, sort of 10 k's from the city, for good quality houses, and so that's what our focus on. So that sort of stuff is it's all what we're experiencing when we're out there.
Right. And so, Travis, I know that earlier on, before earlier, you were talking about second-tier builders, for example, getting trouble getting cover for those. So is that going to impact the housing market, do you think?
I don't know if it's going to impact the housing market. Certainly, a lot of your major building groups, I guess Hutchies and some of the real big clients, they're certainly, a lot of the major projects are all full steam ahead at the moment. And I think certainly Queensland with the Queen's Wharf, the new casino getting built, that's certainly going to add another a huge range of jobs, as well as some of the new rail networks that have just been approved, and just up the road from where we are on Eagle Street, they're spending another $1 billion doing that whole precinct. So certainly there's a lot of positivity coming to the market up here. But in terms of some of the regional markets are doing it tough, like we had some large builders all over in the Sunshine Close, up there towards the Caloundra Way only a few weeks ago, and that's had a bit of an impact to the market up there. And same with the Gold Coast, they've had a number of sort of it has been a bit of a slowdown on the Gold Coast over the last few months as well. So certainly we've had some large timber and
well, you're not letting us in. That's the problem. We'd love to get across the border there, but
yeah. Well, hopefully in a few months we can change things if something happens, and we'll wait and see. But yeah, certainly. Well, July 10 looks like a special day, I guess. That's the main date in which I think everything's all opening. So I think all the restaurants in Noosa and the Gold Coast will be very happy.
And Nick, I guess because people know that you would come across distressed property from time to time, this $1 billion US private equity fund hasn't been knocking on your door looking for distressed property, or are you getting investors looking for distressed property?
The short answer is yes. I'm not, but I'm hearing it. You hear it in the corridors within the office, metaphorically, of course. Yep. I think one of the really interesting issues here is when we get to the end of September and tenants have to make their catch-up payments for the next couple of years, the question will be, to what extent have these landlords tested the quality of the tenants that occupy this space? Right. And I think also, so I think that's going to have an impact. And I also think that to a lot of existing property owners, what do the current concessions mean for the returns to shareholders and the unit holders in those property trusts? Because I think people have been taking the concessions. I think that the property owners have been struggling to keep up with whether or not tenants have in fact qualified and to what extent tenants have overclaimed when they haven't been qualified.
Right.
That'll play out.
I think there's been a little bit of that as well. I mean, what's interesting is they're talking about the mandate of this fund. They don't use that terminology, but they're looking for assets yielding more than 5%, vacant assets with lease-up potential, and land that can be developed. So they're looking like they're looking for long-term stuff. All right, look, we'll move on to our next set of headlines. Signs of a V-shaped early-stage economic recovery. Again, that's from the Wall Street Journal. But we're getting. I just thought it was interesting that they're talking about that in the US. I mean, I don't know if any of you are watching the stock market, but it just. I don't understand it anymore. In fact, I had a friend of mine SMS me the other night that he'd actually sold his entire portfolio because he just couldn't make head or tail of it. With on one hand, we've got doom and gloom. On the other hand, the stock market seems to have been going crazy. And the other headline there that I've put together on this one is PM puts major project approvals on fast track. So it looks like the government is looking to help things along with infrastructure, which I guess we could have spotted that a mile away, that was always going to be the case. They're looking to fast-track approvals for 15 major infrastructure projects, including Brisbane to Melbourne Inland Rail. So I'm not sure if that sounds like they're going to cut us out here in Sydney. There's also an electricity interconnector there. So, I mean, I'll go to you, Travis. Obviously, you guys, when you're getting cover, what do you think of this? Do you think we're going to see a V-shaped recovery? Is there anything in your line of work that suggests that?
No, the insurers a number of the insurers are certainly quite optimistic at the moment. QBE and a number of other, I guess some of the major insurers are very optimistic. They are giving all the major clients a chance to provide updated financials. I guess the good thing is with this year, a lot of these companies which were flying along until about February or March, their financials will probably show up quite well when they do their reports of September, as opposed to the following year. So that will probably help, I guess, a number of our clients in petroleum industries, and a lot of these the larger policies that we look after will certainly help maintain some of the credit limits. It's probably going to be the following year's financials which may have more of an effect, which that's why most of the insurers are really interested to see what's going to happen in probably February next year, is where they're probably peaking at administration levels, will probably be at its highest a couple of months after the JobKeeper and other government initiatives stop.
In this article, it says in the article about the US, it says that they had surprisingly strong sales at department stores when the department stores reopened, and suggesting that retail might be okay. On the other hand, there has been a number of chain retailers that that have gone into administration. So, and I know that one of the concerns that I've heard concerns about major retailers here and how that's going to affect the wholesalers that sell into those retailers. So, anything specific along those lines, Travis, in terms of the suppliers into the retail sector?
Yeah, I mean, it's funny. I caught up with a large computer company yesterday, and they were saying they've never been busier. I guess the IT services and Zoom and a lot of these government initiatives that they've certainly seen a huge influx of people upgrading their different parts of the computer, and I guess games and sales of game. I didn't realise the game sales had gone gangbusters as well in the last 4 months, and some of the statistics she was telling me were absolutely scary. I'm not much of a gamer myself, but certainly the sales have been at record highs the last few months. So that's probably one of the industries in which have certainly been fine throughout the COVID period. And I did hear the other day JB Hi-Fi is obviously having record months as well. So a lot of people, I guess, are spending in those areas at home entertainment. But
there's no doubt about that. I know myself. I bought myself a new Xbox One, which I haven't really used very much. But I know when we started Lunch Money, I didn't have a microphone or any equipment. You couldn't buy it in JB Hi-Fi. These places were empty. I'll just ask Sharon just on that subject of infrastructure. Is that something that you're looking at in your analysis of various property markets? There's this infrastructure spend that's queuing up?
Yeah, we do. I suppose what we're looking at is, I suppose, per person spend. So we know what the average, or before this, in sort of before COVID, we knew that the average infrastructure spend per person on sort of major projects was $3,000 per person in the regions that we look at. So we always know, or look to know, what's going on, so that we can compare and know where the spending's going. But obviously, the big projects that they've pushed forward, and I think Western Sydney has got a big one in there, so Sydney hasn't been left out.
No.
It's got to be a good thing. Yeah, and of course, I think everyone was expecting that's what the government would put forward as well.
I guess, I mean, maybe I should be asking you for where we should be looking to buy properties that benefit from these. Maybe there's a few stops along the way of that Brisbane to Melbourne fast train that are suddenly going to boost. Listen, we'll go to the next set of slides because the clock is running down, believe it or not. Now, look, this is where we're putting on our doom and gloom hats here a little bit, but we are a restructuring and special situation specialist live stream podcast here, so we do cover this stuff. So here we've got potential avalanche of small company wind-ups. We've got 1 in 5 home loan deferral customers are in strife, apparently, according to the Fin Review there. The PM said on the weekend, we can't save everyone, and I'm reading between the lines there. I don't think it makes me a Nostradamus, but I think that in September, JobKeeper is going to end. That's the feeling that I get. I think that he's setting us up for that. Don't expect it to keep going. And beware the September cliff facing major SMEs. So I'll go to you first, Nick. You've obviously got some ideas or some thoughts on this.
Well, I think that everyone for the first couple of months was so fixated on how do we keep the dream alive? Do we push on, or do we bow out gracefully, or do we hibernate? And I think that now that we're 3 months into this, people need to start thinking about what the next few months up to September look like, and beyond that. Because whilst the laws change at the end of September, the circumstances won't change immediately. So I think it's about those businesses that use the lead time wisely to adapt, to recognise that JobKeeper is going to roll off, to recognise that concessions that have been granted are going to roll off. It's those businesses that think about and enact a plan now that will be in a really good position. But there is an inevitability that those that were perhaps underperforming before COVID hit, and or those who spent or exhausted all their capital, won't be able to restart in a meaningful way. So they're going to need some creative solutions if they're going to restart and become sustainable again.
I must say the case study that you gave us in the intro there, I guess was like it covered all bases, didn't it, about what's going on and how it's being handled. Obviously, part of what you're doing is talking to people's bankers. I mean, what are you hearing from inside the banks about how they're getting ready for this? And the banks that I've spoken to, they certainly believe that September's the magic, is the magic month. Would you concur with that? And what are they doing to prepare?
So I think you can't forget that the Hayne Royal Commission, there's still a hangover from that. So the banks still have a reasonably conservative outlook on how they're going to conduct themselves. But you can imagine that there's certain imperatives within the bank that if they've got impaired assets, they need to allocate the right level of capital to them. And that has an impact in and around share price, credit appetite, credit pricing. And so there is an inevitability. It's a question of how the banks will deal with it.
Yeah, they are very concerned about their capital ratios, that's for sure.
Yep.
Banks have warned the regulators that a fall in their unquestionably strong common equity they're concerned about it and how that's going to help them support. They're saying to the regulators, look, we want to support an economic recovery, but we've got these issues with our capital ratios. Travis, you were beginning
Just on that, Nick, it's only a month ago that the NAB raised several $1 billion specifically to provide for impairments. Yeah. So that's one bank. If you multiply several $1 billion times 4, there's potentially a $10 or $15 billion impairment allocation. So it's an interesting time.
It is. It certainly is. What are you saying, Travis? Because we sort of tend to look at the banks and see what the banks are doing, but you're obviously across all sorts of trade suppliers. Do they all think that it's September when the wheels come off, or what are your thoughts there?
We're actually finding the banks are just starting to open up this month. They said the last few months it's been very quiet, and in terms of we're probably seeing we see a number of referrals now from banks advising clients when they're looking at their exposure levels. They basically first thing that a lot of the more proactive bankers out there are asking, hey, what happens if one of your major customers fall over, and what are going to be the impacts? And then sometimes we can have the policies obviously assigned from there. But certainly the last couple of weeks, and you mentioned the NAB before. I've just spoken to a couple of guys yesterday, and they're saying, Travis, we're open for business, and anyone who's anyone who's looking for growth, and they basically gave me a range of industries in which they're looking at, and they're certainly open for business at the moment. They said it was very quiet there for the last couple of months, but just the last 2 weeks, there's been a big push, especially in the Queensland market, for basically to get out there and see what opportunities there are in terms of rates and doing new deals. So
I think, look, I've spoken to a number of finance brokers the last couple of days on the equipment finance side, and they're saying they're super busy. They've got a lot of deals on, but whereas, for example, like a motor car lease, to take the most basic thing, you used to be able to pick a car in the morning and have your finance in the afternoon. Whereas now those things are taking 4 or 5 days. Simple things that used to be, tick and flick, as they say, now need supporting financial statements. So the deals are still getting done, but they're taking a long time. And I have heard of one of the major banks has actually closed the doors for any new lending before June 30, just because they've got too much in their pipeline. I'll just Sharon, how does the bank credit? It's obviously the banks are taking longer to approve deals. How does that factor into your calculations there for property values?
Well, I think I read that article, and I think a key point there was that author stated was about the banks are making phone calls at the moment to clients to see how they're tracking. It would potentially be being open to extending their holidays, because they don't want this volatility if all of these defaults come into the market at the same time. No one wants that. It's good for no one. So I think that was a positive out of that, where that headline just states, it's kind of doom and gloom.
Right. No, that's definitely right. Yeah, we're certainly hearing that the banks are wanting to, they're wanting to help. There's no doubt about that.
Yeah.
Just the stat here is 480,000 customers whose total borrowings are 173 billion have had home loan deferrals. So that's a lot.
Yeah. I suppose once again, there are, markets, there's so many different markets across the country, and there will be some that fare better than others. And even just looking at, say, the CBD vacancy rates for Brisbane, Sydney and Melbourne, where Sydney CBD vacancy rates have hit 16%. So you would expect that those markets in high students, high short-term rentals, could be affected more than, say, your owner occupier established house in blue chip inner city suburbs.
Yeah, well, I guess that's what's interesting about what you do is, I suppose, looking at those sorts of things and how that affects different markets. I'm very interested to hear from Nick. I mean, you mentioned before the legal issues, and you're talking about the wind-ups and that sort of stuff. Do you think it's September, or is it later in the year, or is it early next year? When are you cancelling your holidays from, Nick?
I think it's the run into Christmas.
Yeah.
I think that there's pent-up demand. There's a level of optimism amongst business owners. The question will be, have we experienced a false dawn? And I suspect for some businesses that will be the case. Some will excel. But I think leading into Christmas, there'll be some difficult decisions that need to be made by those that are borderline or perhaps underwater.
All right, look, we'll quickly take a look at the last slide, because I do want to finish on a high note. Again, a Wall Street Journal article here about running on fumes, restaurants trying to reopen, and this was what we were saying before about they've got debts from suppliers they'd received. And I mean, restaurants is the industry here, but it could apply to anybody. They've got debts from February, March that they still haven't paid because sales have been down. But as the economy comes back, they need to buy fresh supplies, and that's obviously an issue where they may have had credit stopped. The other interesting, so we've got this issue of reopening and gearing up and ramping up. And what I also found interesting was that small business startups are on the rise. We had Mark Jason on from Link Business last week, and he was saying that he's getting record numbers of inquiries from people looking to buy businesses. So there is a bit of optimism out there. Just by way of wrapping up, Travis, do you want to sprinkle some optimistic holy water on this?
Yeah, no, we're seeing a lot in the fruit and veg industry and agriculture, and they've certainly had a bit of a ramp up now with some of the restaurants, especially in Queensland and towards the Tweed. I've had a number of inquiries where clients have, they've had 30% growth just this month alone, with all the restaurants being back open, and now we can probably, depending on the venue, you can have up to, I guess, 50 to 100 people in the restaurant, depending on the size of the restaurant. So certainly there's a bit of optimism there. And I'm seeing, and certainly obviously a lot of the major restaurants have been doing takeaways as well, and some have basically, have been basically borderline or probably 10%, only 10 or 20% down on normal takings in some cases. So certainly people up here are very optimistic, and especially with the Howard Smith Wharves areas underneath the Story Bridge, which is that's all opening this week. So I think people are really getting itchy and ready to go out. It's more or less some of the buildings we're finding in the Brisbane, in the city, that they're not allowing many people in the lifts is probably the greatest issue we're finding. We're lucky we already have 12 stories in our building, but the ones next door, they're basically only allowed.
Well, look, we are out of time, so we'll just wrap up now. I'd just like to thank everybody for joining us today. Thank you very much to Nick Martin from Melbourne, from BDO. Also from Melbourne, Sharon Taylor. Thank you very much for making the time and sharing your expertise with us. And from Queensland, Travis, thank you very much. Thank you also to our live viewers. Most of our views and listens come actually over the weekend. So a shout out to those people who are listening to us on the weekend. There's nothing much on telly, so you may as well get some strategic intelligence and get in front of the curve. So thank you very much, everybody, and thank you very much for everybody watching and listening. Cheers.
Thanks, Nick.
Thanks, Nick.